An audit is an in-depth review using established standards to verify that the information presented in the organization's financial reporting is correct. An audit provides the highest level of financial review by an independent CPA. An audit report is the final product of the audit process and provides an independent opinion of an organization's financial statements, including whether they conform to generally accepted accounting principles and whether, based on the audit firm's testing, they are free from material misstatements. Being able to read and understand the contents of this audit report is crucial. An audit report contains several sections. The introductory letter from the audit firm to the board identifies the responsibilities of the board and the independent auditor. The letter also defines the scope of the audit, with a statement that is common to most audit reports, which specifically states that the auditor has examined the financial statements of the organization in accordance with generally accepted auditing standards and has performed appropriate tests to make a reasonable assessment of the organization's financial processes, internal controls, and documents. And finally, the letter contains the audit opinion, which is the most important section of the audit report. Here, the auditor sums up findings by expressing one of three generally accepted opinions or includes a disclaimer, which means the auditor refuses to give an opinion, most often because the organization either can't or won't produce the appropriate documents or information. The most favorable opinion is an unqualified opinion, meaning that management provided all the necessary financial documents and everything was in order and met all auditing requirements. A qualified opinion means that while the majority of documents were in order, the auditor did find one or two exceptions. An adverse opinion is a negative opinion, stating the organization financial records are inaccurate, incomplete, or not in compliance with generally accepted accounting principles. The Statement of Financial Position reports the organization's assets, liabilities, and net assets. The Statement of Activities reports the revenue and expenses of the organization. The Statement of Cash Flow describes changes in cash from one year to the next, created by the items reported on the Statement of Financial Position and Statement of Activities. The notes to the financial statements, or footnotes, provide important explanatory information and context to really help you understand the information presented in the audit. These notes or footnotes are specific to the organization and the audit conducted and are where you will find the meat of the audit report. Included in the footnotes is the schedule of functional expenses. This schedule breaks down the list of expenses by functional area, or what type of activity the expense relates to, such as program services, including educational and annual meeting, or supporting activities, including membership development and general and administrative. The independent auditor will also issue a management letter, which is separate from the audit report. This management letter is addressed to the board and gives the auditor the opportunity to communicate other areas where consideration was given to the organization during the audit. The management letter provides information and recommendations for operations, internal controls, changes in financial reporting standards that impact the organization, and potential risks faced by the organization. Based on the areas communicated in the letter, the board should ask management to consider these and communicate back regarding decisions or changes that will be made. Reading an audit report can seem onerous, but armed with the understanding of these basic areas, you will be ready to ask intelligent questions and feel confident you are fulfilling your fiduciary duty of care as a board member.